Pulse Chain or whatever they want to get. If I have Pulse Chain right now, I probably want to sell my Pulse Chain for Hex because you're going to get a better rate right off the bat. So if I'm doing that, chances are there will be a P Hex to E Hex pairing going on. So I would, take my P Hex, sell it for the E Hex, and then sell it off. When I sell it off, if there's a lot of people doing that, what's going to happen to Hex on Ethereum? It's going to have the massive drop. So people think that they're going to see a big drop when everyone realized the snapshot happened. Wait till you see the drop once it actually launches. It's very possible you can see another drop from there. So keep all options open.
There's about $15 million right now in Hex on Uniswap. And there's about $2 billion waiting for mainnet. And mainnet has $0 right now. So $2 billion is already gone. They're not on the table anymore. I don't think Richard is going to put in those as liquidity for people to trade with. At least, like, maybe a small percentage of that, probably. But so that exactly what Beirut says, like, there has to come money from the outside now because there is not enough money to support the ecosystem.
Yeah.
Like, where do you go? There's $15 million on ETH. That's not even enough for like one big whale. Crazy. You're gonna need a lot of economic energy coming into this. But I think Somi put out a really good video, like where he's comparing different layer ones, like what they do from launch. And they tend to like pump because like the initial hype, people will get in and ape. There's this new shiny thing, but then it will most likely just dump down like the whales is gonna wash out all the small bags, and maybe it's gonna take like 3 to 6 months before we can reach up above sac price again and move from there.
Yeah, I mean, you can look at Ethereum, see what Ethereum did. That sacrifice price for Bitcoin to Ethereum was 31 cents per Ethereum. It did a 10x right off the launch, so it went up to $3, one big candle, and then dipped 50% below the sac rate, so it went actually down to 15 cents. So there's very few charts you can see that. And that was the absolute bottom of Ethereum, 50% below its sac price. And then it went on to its, crazy bull market up to $1,400. So that does, once again, like comes into play of your scenario of dropping 50% below the sac rate, because that is an Ethereum situation that happens. But you can get that 10x, that 20x, 50x. I think it would be higher than like if it did that as scenario. If you say, "Hey, I'm looking at Ethereum, it's going to do exactly Ethereum," I do think it would be a bigger raise than 10x because there's more money in blockchain, and Ethereum was the first of its kind, so no one really knew what was going to come of it when it first launched. Nowadays, you're seeing coins go crazy because there's more money, more people, more knowledge in crypto. So does it do a 10x and then drop 50%, or does it do a 50x because there's now more money and more speculation going on in the space?
When Ethereum launched their ICO, I think they pulled in around $18 million or something like that. But actually, the chart I'm looking at the most, which I think is the most plausible, like for a Pulse Chain or Pulse X to mimic, is the EOS chart. EOS pulled in like $4 billion on their pre-sale, and that one just like pumped, I think 50 or 80% from launch, and then like straight down. But after I think 4 or 5 months, it went to do higher highs again.
What was the question on that though? Is you have to ask yourself, and I don't know the answer to this because I don't pay attention too much to EOS. Is what it might have did 80%, but what was their quote unquote sac price, their investor seed price? Because if they were up 25, 50x, that would make sense.
I don't know actually what the initial like the pre-sale price was.
Yeah, that's the key to that data set is what did they get it from the beginning.
Yeah, they might have even paid much more than what they launched on, actually. Possible.
Hey, B, what about throwing in the reality that with EOS and even at the beginning of Ethereum, we didn't have AMMs. Everything was on centralized exchanges that was taking place. And so when we're looking at the deployment of Pulse Chain, initially we're going to be only on AMM. So when we're talking about launching, let's say at a 10x or 15x or something above sac rate, which it's obviously contingent on it. Okay, the average was 3 zeros and a 1. We talk about it all the time. The largest sackers are 4 zeros and a 5, 4 zeros and a 7, something like this, 4 zeros and a 4. But it's 100% contingent and dependent on how liquid the AMM is, because I don't think that you're going to have whales that are going to be, selling massively into the chart. If the liquidity is so low initially that they're going to be eating massive amounts of slippage to take the profit. So I'd like to just kind of throw that into the conversation, because we're not, we're comparing EOS and Ethereum's launch, but that was pre-automatic market makers and liquidity pools.
Well, that's why I said p-hex, because the only way you're going to get that money out, in my opinion, right off the bat, unless there's something we don't know happens, like it becomes super liquid with a ton of USDC or DAI or whatever in there to start off, the best route for anyone, whale or not, would be to do the p-hex right off the bat. So that p-hex to Pulsechain to p-hex will be the best scenario for someone that's in Pulsechain. Why? Buy Hex, that's the best way to get Pulsechain. That's been advertised for the last God knows how long. So people have been holding Hex, whether they're up or down on their Hex, just to buy Pulsechain. So the second best pair, ratio trading wise, will be Pulsechain to Hex. The first best will be Pulsechain to Pulsex. But if I'm a whale wanting to take out a certain percentage of my money, the last coin that I'm going to go into is Pulsex while it's dropping 70, 80, 90% down. Like, that's not confidence in my head. But if everybody's selling their p-hex from their hex copy on Ethereum into Pulsechain, that would be the best way, because that's where all the liquidity, that's where all the volume will be at in the beginning, because that's what everybody did. They bought hex to get a shot to buy Pulsechain right off the bat before anybody else. Then you take that p-hex, look around, see where I can get the most, bang for my buck, and it's likely going to be a p-hex to Ethereum hex, pairing to have that
Right.
done.
Yeah, I agree. But specific to the selling off of Pulse, we've talked about it before. We know the whales. We know the top, 500 wallets or whatever, and kind of where they're coming in at. If you're in the top, 4 or 500, even the top 100, and you're looking at taking profits at a 10x, you're also looking at what's in the liquidity pools and how much slippage you're going to eat to push that against yourself. And you have to ask yourself the question, do I want to eat that much slippage? And obviously it's 100% contingent on what's in the pools when we launch, right? So when we're talking about people immediately taking profits, if it opens at this and that, yeah, people will take profits. But the question is, how much profits realistically, and what are whales realistically willing to eat in terms of slippage when you have a brand new liquidity pool set up and it's kind of thin liquidity? I think that the individuals who are the market makers will probably in the beginning not just flood the AMMs with liquidity, which would just invite a massive run on exiting into Ethereum. It seems to
Well,
me I'm
that's
kind of happy that anyone who is going to be providing the liquidity initially would kind of set it up the same way, in the same manner that we've seen the Hex liquidity be set up, which is it's enough for people to get in and out nicely, but it's not enough for you to just have every whale dump without some massive slippage being eaten.
So then my question would be, how much money do you think is coming into the ecosystem to buy that has not bought that yet?
A lot. But at the same time,
Give me an average. Like you say, 25 million, 50 million, 100 million.
honestly, man, in terms of fresh money coming in, I would say between 50 and 100 million. And then you also have to add in what centralized exchanges are going to pick up Pulse initially as well, which will change the market as well.
So it wouldn't be that big of an issue. The liquidity probably would be there if you have that money coming in to buy off of bridges, off of whatever it is. If you're telling me that volume is going to run me at $200 million of buys and sells top plus, then the liquidity might be there. If you think $100 million or fresh money is going to come in the ecosystem right off the bat, that's a
Well,
lot of money. That's a lot of
Beanie,
money for people to take.
look, man, we know just single investors that we know are ready with millions, just single
Yeah,
investors.
and that's why I
So
say
talking
point
about
zero
fifty, a
zero
hundred
zero
million is
one.
nothing.
Most people won't be in the profit at 0.0001 to be able to sell for $100 million or $50
Correct.
million. So that's what I mean. You're not going to see that big dump when you got people buying Hex or buying Pulse Chain from Hex. You got people buying Pulse Chain from Pulsex, and you're thinking $100 million of fresh money coming in. That's the whole point I was making. Is I don't think you're going to see that big dump that you'll see, but I do think there will be enough. If you think 100 million is coming in, that is plenty of economic energy for people to come in and actually do a, hey, I'm up 10x. Maybe I got, let's say $1 million of Pulse Chain, and I want to take out, 50%, $500,000. That's nothing for $100 million coming into the ecosystem. So that's why I say I don't know if we see that big drop if that much money is coming in.
Yeah, when I talked to Rackham when I was, adminning for Pulse Chain multiple times, which is I believe they're the largest sacker. He said he wasn't even considering taking profits until around 1,000x. Now you can say he's lying, you can say whatever, but I do think that a lot of these larger sacrificers who are obviously mega millionaires already, you're not going to throw $39 million into a sacrifice unless you're massively billionaire. Period. Like these guys are billionaires.
True, yeah.
You don't send $40 million into a black hole unless you're a billionaire. Let's be real.
I
Yeah,
think
but
the
a
non the
thousand
non
X from
Real
what?
numbers.
non OA, I believe it's like $650 million of for Pulse Chain. Let's just say 10% of that wants to be sold. So you're talking about $60 million, if that number is right. But I would say a
Without
10%,
volume bonus.
you're up 10x, and 10% comes out of that. You're talking that much money right off the bat. Even $100 million and 600 million wants to sell. Well, someone's not going to be able to sell because it's going to go down, and they're going to be like, "Well, I'm not selling at that price. I was going to sell at 10x, but I ain't selling at a 4x or a 5x." So at most, I could see $50-60 million leave the system or swap hands to somebody else. So it'll get interesting. I just don't. The only thing I can see dumping is Ethereum Hex and Pulsex. I've seen it all. Thought I've seen it all, but
I do want to just let everybody know that they need to be really careful when they're ratio trading. So you're seeing on V3 and on V4 that the initial ratio was 1.06 pulse to 1 PLS. So that was really skewed in a couple of seconds, and it went to a 3-1. And when you look at the AMM bot, one of the community members built a app to use where you can just go put in the block height, which is where the fork happened, to see how much of the forked over liquidity was actually redeployed in Pulsex. So the AMM bot does buy up a hell of a lot of the forked over liquidity, but it doesn't actually redeploy a lot of that liquidity. So it was less than 3%, I think like nearing 2%, closer to 1% of the actual forked over liquidity that it bought up. And you do have to remember that the AMM bot isn't necessarily to give everybody the opportunity to buy a bunch of Pulse. The AMM bot is designed to fix the market caps and the ratios of the forked over liquidity and the tokens. So because the supply is 1.2 million X, the AMM bot's job is just to fix the market cap to make sure that the forked over tokens do have a chance to survive, not necessarily give users the opportunity to trade. So when you're looking at ratio trading, be really careful what you're actually trading into, because I did notice on V4, somebody extremely wrecked themselves and made the ratio 1 pulse to 65,000 pulse X. So when you're ratio trading, you need to actually look at the liquidity. So when you're on Pulsex information page, you press the 3 dots at the top, you go to info and you look at the liquidity itself. There's also some community projects that are being built for it. So Hans is a great community member who's actually building a little bit like a deck screener, so to speak, for launch. So that will tell you the liquidity, show you the charts, etc., etc. So there is tools to look at, but be really careful if you're ratio trading and the quantity that you're ratio trading. So if you are looking to do it, look at the price impact that it's having on it. Look at what you're actually getting for that trade. So there's going to be a lot of people sitting there waiting for those poor people to make the wrong choices, and they're going to be the ones that profit off that. So when you look at the price of Hex,
100% back what Katie is saying. Definitely have your freaking calculator next to you and run the ratios before you pull any triggers.
yeah, I mean, like if you swap 1 pulse for 3 pulse X and then swap back for 2X that, then you're doing great. But if you end up on the other side, you're going to get wrecked when price discovery actually happens. So
yeah, that is really good advice because yes, people are going to get wrecked, right? They're going to be thinking they're getting a great deal when in reality they may be getting an awful deal. And one piece of mind that I like to give out to people is if you believe in Pulse Chain long term, then let's look at Ethereum. Okay, you could have got into Ethereum in the 30-ish cents. Well, if you would have not got into Ethereum day one, let's say Ethereum 10x, and you didn't get into Ethereum until $3, are you mad at that bag right now? You're absolutely not. So even if you're not in on the very first initial second, don't FOMO. There's a lot of risk in FOMO.
FOMO sometimes gets you the worst opportunity versus, somebody that DCA'd through the first 3 months of a launch. So like when you look at Ethereum's launch, 3 months in, it did take a downtrend. You look at Hex, it took a downtrend. People that bought in a month or 3 months after it launched got a better deal than people that FOMO'd in day one. Richard even said himself, when Hex launched, people don't go rushing in buying day one, give it a minute. But a lot of people rushed in and bought day one, and they didn't get to experience the 10,000x. They got 6,000x, which still isn't bad. But again, that's why a lot of people in the community, especially the OGs, preach DCA. And when you look at previous launches, it's because of the same factor. So when you're looking at Pulse Chain's launch, for instance, a lot of people are speculating that it's going to launch at 3 zeros and a 1. So you guys need to remember that there was bonus multipliers in the sacrifice phase. So some people are already sitting at a 2x at launch. A lot of people missed out on those bonus multipliers, but a lot of people also got in. So some people are already in profit if it did launch at that price. So to say that it's just going to go straight up into the right, well, that just doesn't happen. We've seen with Hex that there is some malicious actors inside of Hex that are happy to dump the price to cause FUD. That just is what it is. But to say that they couldn't potentially be in Pulse and PulseX is incorrect. And then when you see a lot of people sacrifice for PulseX to get or obtain Pulse, so there could be a lot of price movements there. But then there's also a lot of people that over-sacrifice for Pulse, and now they want more PulseX. So remember, volatility is definitely something that we're going to see in the first few months. That's why protocols that are launching stablecoins won't be launching in the first several months of Pulse Chain mainnet. For that main reason is the extreme volatility that we'll have. So don't go FOMOing, rushing in, thinking you're going to miss out. Look at how big your bag is and how much capital you actually have, and then make your plan whether you're going to put 50%, 5%, or 1% in day one, and what your plan is after launch has happened, because a lot of opportunities do arise.
Hell yeah, I'm literally eating every dump. Dollar cost averaging every dump. So y'all dump, I'm eating. I don't care.
I just want to respond to what Katie said, saying that I'm one of those people that have the bonus. Mine's 1.9. I'm not selling a damn thing. So
Right.
Well, if you don't, you don't mind, pass it over.
I mean, if you're going to try to day trade this or try to pinpoint all the bottoms, you're never going to do it. You just never know on any given day what's going to happen. And so it's just, if your mindset is just, hey, I'm just going to accumulate, when I feel like the price is good, in the long run, you're gonna make out. But if you're trying to pick tops and bottoms, it's nobody can do that.
But I did want to throw my 2 cents in regards to this conversation about a potential accumulation strategy at dollar cost average, because I think this is a very important conversation to have. I recently took a look at a lot of the major Ethereum competitors and how their price chart looked like when they first came out. And the common throughput I found was that within the first month, within the first quarter, was typically the all-time low for, these Ethereum competitors. And so, even though the past is not a guarantor of what's likely to happen in the future, there's probably a pretty decent chance that the first month, the first quarter, whatever decent dip that Pulse Chain, PulseX gets might be the all-time low. And in regards to how to go about navigating the space, because there's so much uncertainty. We don't know what the liquidity pools are going to look like. We don't know how the bridge is going to look like. We don't know what premium we're going to launch over Sacre, and then how the market's going to play out afterwards. So I think, it was a recent conversation I had with Furu Finance that really kind of solidified my thinking on this in regards to dollar cost averaging really being the only way to mitigate all this uncertainty. But with that being said, I would want to suggest weighted dollar cost averaging. Like, for example, if you get paid every 2 weeks, your money's in crypto, you have dry powder ready to deploy. Perhaps, you don't bust your load right away. Perhaps you wait 4 hours. Perhaps you wait a day, you look at the market and see if you can catch a dip. Because even in an uptrend, there's always dips. So I would encourage dip buying for sure. Please, people, do not FOMO. And as well, just to kind of finalize my thoughts on this, I would encourage people to look out for a deal. You know, there's so much we don't know in regards to how this launch is going to go, but what we do know is that there's a pretty decent narrative out there that we all understand has a decent chance of being true, which is, you know, there's going to be a lot of attention in regards to Pulsechain. A lot of people are going to be FOMOing into Pulsechain. And so, you know, if we're talking about people who are theoretically interested in ratio trading, it might be helpful to kind of think about ratio trading in this respect, where if, you know, right now on testnet, if we look, there's like a 1-to-3 ratio for Pulsechain to Pulsex. That's essentially the market saying that it believes Pulsechain will 3x outperform Pulsex. So if you believe that and you want to take that trade, go ahead. So what I'm saying is the greater that ratio becomes, the greater the likelihood of there being a dealer. For example, if there's a 1-to-10, a 1-to-20 ratio, where you get one Pulsechain for every 20 Pulsex, that's the market saying Pulsechain will 20x outperform Pulsex forever. And that's a little less believable in my opinion. So in a case like that, you know, I might be more so inclined to dollar cost average into Pulsex, because in that case where there's a crazy ratio, there's a more of an obvious deal to be had. So to kind of summarize my points here, you know, folks, try and find a deal. FOMOing to the thing that everyone else is FOMOing into has never historically been, or rarely historically is, kind of a good strategy. So look out for deals, and then perhaps consider weighted dollar cost averaging as well. There's always dips. Typically within the first month, within the first quarter, is the all-time low for Ethereum competitors. So if you could look out for a decent dip within the first month, within the first quarter, and go in, you know, relatively heavy, then historically that's been a winning strategy. So those are my thoughts.
You just never know, though.